Does this OPEC Plus alliance, Saudi and Russia, does the alliance and the closeness actually last?
Well, we think it probably will. Obviously, we'll have to wait until the end of the month when they have their next ministerial get-together in Vienna. You said in your introduction that the current market outlook that the IEA put out last Friday suggests that as we move into 2020, that the call on OPEC crude is likely to be lower than it is this year. So obviously, they do face a major challenge in balancing the market and keeping the oil price at the kind of levels which is suitable for their interests.
Okay, if you look at the geopolitical risks out there, Neil, can they really throw oil off track, or is it kind of range-bound in terms of price?
Well, as far as the geopolitical risk is concerned, obviously the tanker attacks that we've seen in the last few weeks, the 4 a few weeks ago, the 2 at the end of last week, this is obviously raising risk. There's no doubt about that. But so far, the market has reacted in terms of the price in a very limited way because there hasn't actually been a significant supply interruption so far. And essentially, the market has taken the view that there is plenty of supply out there from other countries available. We're seeing expanding production from the United States. Stocks are fairly healthy. And it's been fairly clear from the political messaging that's been put out that an interruption, a significant interruption to supply through the Strait of Hormuz is not something that would be accepted.
Neil, there's a fancy Marshallian cross. See how you do this on a Monday, folks? You get very, very sophisticated of supply and demand dynamics. And in oil, it's always been assumed that's a very tight relationship. There's not much wiggle room. I sense that ebbing away right now, where the market's not as tight as it's been for the last couple of years. Is that true?
Well, what we saw in 2018 in the run-up to the imposition of sanctions against Iran, in anticipation of that, there was a huge increase in production from Saudi Arabia, Iraq, Russia, and, of course, the ongoing production growth in the United States. So we saw a big build-up in stocks. And at the very first part of this year, 2019, we saw another big build-up in stocks. So there's plenty of stock in reserve. There is spare production capacity idle because of the OPEC Plus production cuts. So the market is not perceived as being tight as such. However, on the fundamentals, the market is expected to get tighter as we move through the second and third quarters.
Within that is who controls the price. The belief still is there's a cartel economics that controls the price. Is the cartel dead?
No, the cartel is not dead. The obituary of OPEC has been written many, many times over the years, and doubtless that will come up again in the future, depending on market circumstances. But clearly, if you have decided as an organization and invited other like-minded countries to join you to withdraw 1.2 million barrels a day from the market, that is a decisive action which affects the direction of the price. You have that power. And we'll have to wait and see at the end of this month when the countries meet again if they decide to continue to exercise that power.
Neil, as the trade war drags on, what kind of impact does it have on oil demand?
Well, in the report we published last Friday, we cut our expectations for oil demand growth for the second month in a row. We've been fairly consistent for several months, but now we've gone down to 1.2 million barrels a day. And a large part of that is due to what we can see before our very eyes in that trade growth is slowing. We saw a downgrade to GDP growth from another one of the institutions the other week, the OECD. So all the signals as far as the broader economic picture are concerned are fairly bearish for the time being. And we've seen real oil demand numbers for the early part of 2019 confirm that there is lower growth than we had first thought.
Right, but if there was a trade deal to be signed, if not at the G20, shortly afterwards, does the market automatically rebalance itself quite quickly, Neil?
Well, if that were to happen, that would obviously remove one of the current huge uncertainties, because it is that uncertainty, the fact that from one week we seem to be getting a positive outlook to trade talks, the next week things seem to be less attractive. If that were to be removed, that would indeed do a great deal to restore confidence in the wider economy, and in turn that would have a more positive impact on oil demand growth.